Time now for Futures in Focus. Joining us today from the CME is Bill Baruch of Blue Line Futures. He's the president there. Bill, it's been a volatile 24 to 48 hours. How have you been managing it down at the CME? What are the products that you're looking to?
Well, we've seen a lot of volatility in the Treasury side of things. I mean, even after the Fed, you saw the Treasuries run higher. But right now, I think you're seeing sentiment really reach an extreme here on the 30 years and the 10 years. And this provides an opportunity to the downside. But you do have to see some stability in the equity markets. If equity markets don't stabilize, then the Treasuries, they're not going to turn down. The yields are going to stay low.
So we had a huge turnaround this morning. Futures look to be pointing down and down big for a second day, and all of a sudden, the session starts here in the US and we have a nice bounce. What do you do in a situation like that? Are you staying out of it until things stabilize? Are you watching what happens with yuan fixing over the next couple of days?
Yeah, a lot of it's riding on the Chinese yuan right now and the narrative behind that. But the interesting thing to look at with the equity market last night, a lot of that damage happened overnight. So a lot of people aren't watching the futures. If we did close very poorly, but the fact that we were only up about 1% on the open, not people knowing that we were 100 points off the lows in the S&P, probably was actually more stable. I think if we were up that much, 100 points on the session, you would have seen some more selling, and that could have caused more panic just because the volatility is so high. But right now, with a stable situation, I do expect the 10-year to come in, and my trade team right now is coming up with different strategies to take advantage of that. I think that we're going to see yields stabilize, and we're going to see the 10-year back above 2% here not too long. But again, you have to see equity markets stabilize.
Really? So if equity markets stabilize, that's the condition for the 10-year to rise, what, 25, 26 basis points? What makes you think the 10-year will rise so much? We've had HSBC just this morning changing its call and saying we're going to see 150 on the 10-year.
Well, if you take a step back and you look at where you're pricing in right now, the Fed's narrative and the Fed cutting rates, you're seeing nearly 30% of a chance that the Fed will cut 50 basis points in September. You're seeing 4 cuts priced in this year, basically. So with that already priced into the market, I think we start to see growth stabilize overall as well. You typically see a poor Q1 move into a stronger Q2. And when you get stronger growth in Q2 through the spring, however, given the government shutdown early on this year, this could be 30 to 60 days delayed. So I think we're going to start to see better growth through the middle part of this year. Yes, the trade narrative, trade war between U.S. and China is really a headwind here. But outside of that, I think we're starting to see the growth stabilize. German factory orders this morning surprised the upside. And I think that had provided a tailwind to the market overall. You had strong data out of Korea, out of Japan, and we're going to see that come in through the rest of this week, I think. That's going to provide a tailwind overall.
All right, Bill, we'll let you get back down there to the pits. Bill Baruch of Blue Line Futures joining us from the CME.